Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in these insane markets. And today is another lesson on how to day trade from a 30-year veteran giving you inside tips. How could you go wrong? I don't know. Anyway, if you like what you see, please like and subscribe. Send the videos far and wide so we can build a big trading community. And today we're going to be doing day 3 of how to day trade. I don't even know what the fucking title is. How to day trade successfully or something. Like, people write that shit for me, for like YouTube, like tags and shit. I'm not really, really very well versed in that. But anyway, let's get on to how to day trade, day 3. Now, in video 1, we said that we had to go over the weeklies. The weeklies were really important. In video 2, we said you need to figure out how many days you want to go back. You can't optimize, just stick to a number of days. In this video, we're going to cover a few things before we get to the trading system itself, Fibonacci strike, and also, a trend indicator, which is really important and really cool. So anyway, but in this video right now, I want to introduce you to one of my indicators that I develop, and they're called trend reactionary numbers. I think that some people call them trend reactionary levels, whatever, they're trend reactionary numbers. So these were given out to the trading room, and they get them upon request. They last for quite a long time. So these were actually put out about 3 weeks ago. And here they stand right now. So as you can see, the trend reactionary numbers are really incredibly accurate. Now, in order to prove that to you so that you'll say, oh, Tom, this is a bunch of horse shit, what I'm going to do is I'm going to include in this video trend reactionaries I put out for something I don't even track. I mean, I don't even really know it. It's called the NQ1. It's the NASDAQ index for, it's the same. It's a NASDAQ index, but it's like a mini index for people with smaller accounts. They can trade it. And you can go to the comment sections. You'll see that I gave the man the trend reactionary numbers on the date. Then you can go to NQ1 and see how those numbers reacted. I was shocked myself. I don't know what happened to the guy. I mean, I gave the guy a gift and he disappeared. So enough with the, self-promotion. Now, why am I showing you this? Because if you're interested in this, send me an email at support@parkavenuetrading.com and tell me what currency you're interested in. I'll be happy to give you the trend reactionary numbers for that currency as kind of like an olive branch to you to show you that, the stuff that I have is really good. Okay, so let's move on into the lesson and let's talk about why a trading system is really important and what we're doing here. Okay, so hang on one second. Okay, so I had one of my assistants write this. It looks like they just used AI and came up with this crap. I don't know why I pay these people, but anyway. The reasons to have a day trading system and something that you actually created and didn't optimize, you basically found an edge using, a technique. Let me move myself down. I'm kind of like over these things here. Is that with a trading system, you can define consistency, and that is really important. Okay, no matter what the consistency is, you can find out, how your trading system reacts in different types of markets. Now, here's the thing. We're going to be talking about how to determine whether a market's in a range or whether a market is, trending up or down. And, you should have an adjustment to your trading system for these types of markets. So like I said in a previous video, I have a volatility system that if I don't look to see what's happening with if there's a trend change or a potential trend change, if I just follow my Genesis system, it's going to be wrong a couple of times before it actually catches the proper side of things. And that's fine with me. I mean, I have no problem with that at all. So it helps to find consistency. The next thing it does for you is for risk management. You know, it provides a guideline for risk management, including where your stop loss orders and position sizing, which is a completely different video, because you don't realize how important position sizing is. Position sizing is really the key to you reaching your objectives. And in this course, I'm going to do a position sizing couple of models. All right. Now, nobody wants to listen to this stuff. Everybody wants the magic entry point, but I'm going to tell you, there is no real magic point. It is a combination of combining all of the things that you learn and you keeping them in the back of your mind so that when you're trading, you're following your plan. Okay? There's no one magic bullet and out there. I wish there was. If there was, I wouldn't give it to you. Okay? I wouldn't. I keep it for myself, being selfish bastard. Okay? But there isn't one. Please put the kids away, because I'm from a trading floor and I do use bad words, All right, so the next thing is performance evaluation. All right, so you can track your performance with a trading system. If you don't have a system, you're going to be haphazard in trying to track things. One day you felt really good about things and it worked out, and then the next day you felt really good about things and it didn't work out, but you forget about that day. And you only remember the day that, like, my right toe shot a pain up through my leg, and that gave me a great, trading signal, and I'm getting it right now, so I'm going to do it. And guess what? If it doesn't work out, you forget about it. The mind has an incredible ability to forget about negative things, and except for when it's self-talk. If it's self-talk, it's 90% negative. And we'll talk about that in the psychology of trading later on in this webinar series. So we're going to cover a lot of cool stuff if I remember to do it. And if you like it, please leave comments. If you like this and you want to hear more about what is the obscure areas of trading, leave it in the comments. I need the comments because that helps elevate my videos in reality. And I want to reach as many people as I possibly can because, I'm an egomaniac and I want to be a star, But anyway, so performance evaluation is there. Trading system, it's discipline. It enforces discipline. If you don't have discipline, you don't have anything. And your trading system is going to enforce your discipline if you follow the rules. Now, here is one of the great things that I learned from Dr. Van Tharp. Unfortunately, he's no longer with us. I had a conversation with him. And because he was mentoring me in the psychology of trading in the 1990s, and I was a bank trader and a proprietary trader, and it was very stressful. And I used to have a call with him every 2 weeks. So I had this call. I had a miserable couple of days. I mean, it was just horrendous. Things were just not working. Trading systems were, losing money. So I called him, and the conversation went something like this, Van, I don't know. I am, right now, I'm down like, 6% on my monthly P&L and blah, blah, blah. And I'm crying about it. And he said to me this. He said, did you follow your trading system rules? And I said, yes, I did. He goes, so you didn't break your rules? I said, no, I did not. He goes, well, pat yourself on the back twice. Because losing's part of the game. Okay? If you have a loss and you followed your trading rules, you didn't have a loss. It's just part of the game. Now, if you had a loss and you broke your trading rules, then you had a loss. But if you're following your rules, and even if you lose money, pat yourself on the back twice because you followed your trading rules. And that was, that was brilliant. That was uplifting to me. And hopefully it's uplifting to you because you need to follow your rules. Okay, time efficiency. With a trading system, basically it tells you when you should be trading. You have points, right? So you don't have to sit there and watch markets like I do all day because I just simply love it. But, if you have a day job, you can develop your system so that, on your phone you get your alert. Hey, this is a sell area. Hey, this is a buy area. Hey, then you can execute your plan accordingly. All right. With a trading system, you can get objective analysis. Okay. Here's the thing. Do your own analysis. Don't take tips from your friends. Don't be in those trading room, like, I don't even know where they are, blogs where people are talking about this, that. Don't get swayed. Trade your system. Now, if you happen to follow me, listen, you could take what I say. Now, this is not talking out of both sides of my mouth. If you happen to follow me, then listen, hey, this guy's saying resistance here. Do I have resistance there? He's saying support here. Do I have support there? And if you have something different, and it works for you, you follow that. But, you look at me like, with one eye closed, and let's see what this guy's doing. Okay. Adaptability. A good system can be adjusted based on market conditions. That's what we were just talking about early in the video. So, in summary, a trading system enhances a trader's effectiveness by promoting discipline, reducing emotional interference, providing like a structured approach to markets. Now, that's not a bad ending. I'll give the assistant that. Anyway, all right, so let's move on to the charts and let's talk about the next key point in this. Oh, and before I wipe off all the trend reactionary numbers, what I have right now, and like I said, these are my numbers, and I look at this, I keep this in the back of my mind. I don't just go and blatantly trade the point. I have to wait to see what the market price action is at each point, and I have a way of entering. But right now, what the trend reactionary numbers are saying on September 14th, 2024, at 10:07 in the morning, where the market's dead, okay, saying if sterling yen cannot recover above 162.70, the target for sterling yen is 175.24. That's a bold statement, and I'm making it, okay? So it's 192, say 70, 80, 193, okay? If it cannot recover over that, the target's 175.24. That's far away from here. But anyway, that's what it is. And let me finish erasing these and get on with the lesson. Okay, the next step that we're going to do in day trading, how to day trade with a master trader, Tom Alonji, the price predictor, is we're going to go over like a good way to gauge market sentiment. And how we're going to do that is we're going to apply a formula for projecting tomorrow's price range. And now I did a video on it, but I did a simple video like the easy method. But this method is a tiny bit more complicated. You could put it in Excel. It's real easy. It's basically used as a way to figure out what the marketplace is trying to whisper in your ear during the day. Okay, it's pretty helpful to have the levels that we're going to calculate right here. So hang on a second. Let me get over to the sheet so you can copy them down and so forth. Hang on. There's been some research out there, and I think that it was led by George Angel. I'm not really sure, but these were taught to me. I didn't come up with this, but I found it really interesting. I found it very helpful to figure out like how price action is gauging market sentiments or market, like what the market wants to do. Because what I found was that these levels, when they hit, they're very important. I'm going to show you exactly what I mean by that when we get to the charts. But anyway, it's shown that there's a relationship that's influenced by the current day's price versus the current day's close versus the current day's open. And there's three possibilities that exist, right? The close is less than the open today, and now we're going to put a filter in of 30 pips in there. The close is greater than the open today, again with a filter of 30 pips. The close today is equal to the open today with a filter of just 8 pips. Now, the filters were developed by a guy in my trading room. His name was Paul. He was a mathematician, and he did a lot of work with bell curve analysis and standard deviations and stuff. And he came up with this to add into the formula to kind of help tweak the formula a little bit. You don't have to use the filter if you don't want. You could just go straight with the formula itself. It's fine. But it does add a little something to it. It sometimes helps. So anyway, so if we have these three relationships that exist. So you might want to write this down, pause the video, write this down. When you have a close that is greater than the open, to figure out tomorrow what the projected range could be and how the market's reacting, and you can get a good sentiment with this, is you would take the high today, plus the low today, plus the close today, plus the low today, add 30 pips, divided by 2, you get X. Now you get tomorrow's projected high as X minus today's low. Tomorrow's projected low is X minus today's high. So again, we're taking daily data now, and we're shrinking the daily data down, and we're projecting like an idea of what could happen tomorrow. Now remember, these are just ideas. These are not, like written. This is not written in stone. If this was like, the method, that secret that you were looking for, I wouldn't be giving it to you. All right. I mean, I'd be just keeping it for myself and sitting on my gold throne, eating figs and drinking wine all day or something, But, it's a good formula to have. So today's close is less than the open. Okay. If today's close is greater than the open, okay, it's going to be the high today, plus the low today, plus the close today, plus the high today. So you notice, like, when the close is greater, okay, we're basically taking the high twice. When the close is less than the open, we're taking the low twice into the formula. We're going to add 30 pips, divide by 2 gives us X. We get tomorrow's projected range equals X minus today's low. Tomorrow's projected low equals X minus today's high. What happens if the close is equal? Well, if the close is equal, now I'm going to be doing this on a chart to actually show you what I'm talking about, just in case you're getting confused, because high today, low today, close. It's yesterday's data. So whenever the marketplace closes for you, for me it's 5 o'clock Eastern Standard Time and a new day's opening, I'm going to be using yesterday's data to compute basically the projected range for the day that I'm trading, and I'm using it as a sentiment indicator, like what's going on, and I'll explain that in a second. Okay, so close equals the open, same exact formula, high, low, close again. Okay, kind of interesting, right? Close equals the open, all right? Plus 8 pips divided by 2 gives you X. Tomorrow's projected high equals X minus today's low, or the previous day's low. And tomorrow's projected low equals X minus tomorrow's high. So pause the video, write down the formulas, throw them in Excel, go out on your trading, go and look, and then, come back and watch the video if you want, or just stay with me and I'll show you exactly what I mean. All right, so hang on, let's get to the charts. Okay, applying the formula. Okay, so let's just pretend the market's just closed here, and we want to use that formula to figure out, like, tightening up the market for us for tomorrow's day trading session. Okay, now don't forget, we also have our pivot points that we tracked for 10 days. So we have the highs and the lows, the resistance and the support points. And now what we're doing is we're adding, a filter on here that's going to help us figure out what the market sentiment is. Is the market continuing? Now, we're also going to do, and I'll do this on the next video, so stay tuned for the next video. I'm going to do a trend, basically 3-bar indicator for you also to add to this. All right, so we're really gonna be tightening this up, and stay tuned for that, because I don't really want this video to go that long, because the mind can only stand so much, as much as the ass is starting to hurt in the chair. The ass starts getting a little uncomfortable. You say, you know what, I can't. I need the 5-minute fix. There is no 5-minute fix. Okay, so here's the formula. Right? Okay, well, we said, if we look at the previous day, the day before this one, all right, what is it? Well, the close is greater than the open, right? So we have that formula. So what's the formula? Well, it's the high today, plus the low today, plus the close today, plus the high today, plus 30 pips, divided by 2, gives us X, which is 372.61. So the potential high for this trading session is the 372.61 minus the low of yesterday, which was 185.28, and we get 187.33. And our market didn't come close to 187.33. Okay, it fell right out of bed on the open. Okay, that's fine. Okay, it doesn't matter. We're going to put the points up, then we're going to look at the hourly chart to see how this could have helped us. We have a potential low of the day is the 372.61 minus the 186.74, which is the high. All right, we come up with 185.87. Well, it blew through that, but hang on a second. Let's put the prices up, okay? Okay, these are our range projections that we figured out the night before, and we put them up on our chart. We had the resistance supposedly at 180, or the projection, the price projection at 187.35. We had the price low projection at 185.87. And you notice as soon as the market opened on Friday, it blew right through this. Now, also, you know, just so, hang on a second. Hang on one second, okay? This is important, all right? And let me get to it in a second. I don't want to sound like an idiot, but hang on. Hang on. This book can help you, all right? This is the book that basically I'm giving away for free, and it's 3 steps to avoid false breakouts, okay? And it's a really good little ebook. It basically encompasses like what we're doing here. We're talking about if a marketplace, you know, breaks below a certain line, you know, how can we tell if it's a false break? How we can tell if it's a good break? And it's all free. It's a great book. Chart examples, everything in this book. So head on over to Park Avenue Trading, sign up, get the free ebook, and then continue on with this course. Put this print thing out, have it next to you, and then we can discuss it. All right, so let's move on to the lesson itself. All right, so we projected that like this really should have been a low for the day if the marketplace was going to continue in a bullish manner. It did not continue. So therefore, look how this price up here acted as resistance. Okay, now if you could have went back in your 10 days, you know, and you were looking for a price to sell this thing, well, you'd have to go probably to a higher time frame. Let's go to a 4-hour chart, see if we see anything aside from the thing just breaking. All right, right. You know, this basically gave you the indication that it didn't hold. This thing is going down. Well, where's it going down to? Most likely it's going down to this 183.72 level eventually. But we're going to recalibrate, you know, these prices again starting Sunday for Monday's market, or actually Sunday becomes Monday's market, right? So what I suggest that you do with this stuff is you use it as like a market sentiment indicator, okay? When this price low that we projected broke, it was a great indication for you to say, hey, I really shouldn't be buying dips on this thing. I should really be selling rallies on this thing. And I know that I have a price point up here that really, if it goes above, closes above, and then the queen confirms, I should be really concerned with, right? So this little formula that I gave you, it will be a big help for you to determine market sentiment. Now, I think I went far enough with this video. I mean, I gave you the open price projections for you. I think that you should go back and test those. Tomorrow, in tomorrow's video, I'm going to go over 3, like a way to determine, you know, what the trend is. Plus, you know, plus you have this, so then you could actually go back out to the dailies. All right, figure out what the dailies are saying. And then no potential breaks using just the daily charts, the highs and lows of the dailies. And this is going to give you real good laser focus on what the market is doing. So please, if you like what you see, smash the like button, subscribe, Make sure you leave comments. I really need comments because I don't know what you guys are thinking. I mean, come on. I'm trying to give you as much information as I possibly can. I want to have a conversation with you guys. Also, share the videos. All right. You know, far and wide. We want to build a big trading community where we can all hang out, have fun, talk, and have real systems. All right. So remember, always enjoy the party. Dance near the door. I'll see you on tomorrow's video. Be sure you don't miss it. Cheers.